All right, good evening, everyone. Welcome back to another episode of my trading vlog on YouTube. This is Aaron, your host, coming at you from New York City. Today was a crazy, crazy day in the equities markets. Just to give you an idea of just how crazy it actually was, let's just look at the daily candle, which looks a little bit messy with all these lines. But just take a look at how high it opened and went up and closed. This is hundreds and hundreds of points on the Nasdaq. A lot of wicking action on the S&P, and perhaps the most intense bearish candle comes on the Dow, which is usually when there is a down day. The Dow usually feels it the most, along with the Russell. And I gotta tell you, I'm starting off today's vlog like this because I definitely felt the Dow the most today because I was in those trades on the wrong side of it, right? So definitely not ideal. But my overall day today was like kind of a wash. I started off the day, a couple of $100 in profit. Like $250+ in profit, and I was pretty happy with that. And then I caught a string of losses on the opening breakout trade in crude oil. That didn't work out, and the nasty wiki candle that you just saw on the Dow. This is obviously it's a micro. I only trade the micros to keep risk in check. But you can see that there's two arrows up top, two arrows on the bottom. Both, I have two losses, back-to-back losses on the Dow, and I'll show you exactly how that came about. But let's take a look at the S&P to start. The S&P, the opening breakout trade, actually worked out in my favor. And I took multiple contracts as I said I was gonna. I didn't take it until a little bit later. There wasn't that much action here, and here's the thing that saved me from further losses. First, let's take a look at. I'm gonna talk about the opening breakout trades quick, and then I'm gonna also talk about how I'm gonna trade a slightly differently. Going forward. So here's your opening range candle, or your ORC, right? This 15-minute candle. Again, if it breaks above, you buy, and it breaks below, you sell. But you can see that the next 15-minute candle broke below. And normally under just, granola, vanilla, textbook rules, I should sell here and then hold the trade and then get stopped out. I've been feeling that I've been doing this opening breakout trade experiment for about a month now, and it's I guess overall it's given me some profit, but I don't really like the way that it's been going. I've been doing it almost every day for a month straight, and it hasn't been the best. So I'm taking the momentum into account instead of just taking the opening breakout both ways. And so here we had a bullish pressure, so I didn't take the short. I took the long, and it worked out. I took a 1-to-1 profit here, somewhere around here, and then I held it for the full quarter at 32.25. And I also wanted to take the short off the 32.25, but after I took the profit, you can see that it never bounced back. I had a feeling this was going to go. I had no idea it was going to drop this much, but I had a feeling it would retrace at least to the 3200 because of the bigger time frame picture of where we're at. Right? This is a going all the way back to June. If we can even look at the daily. Yeah, I had a feeling like, all right, we were really pushing it because this was the pivot high on the daily, all the way back on June 8th and June 9th. So I had a feeling this was going to come into play, and I I wanted to just set a sell order, but for whatever reason on TradingView, I can't have a sell order uh, while I'm live in a long. Like I got to figure that out because that cost me a lot of money today. You know, it wasn't really a big deal. I didn't really think of it as a big deal until today. But man, it really cost me. I really missed out big, not knowing how to do that. And then I ended up like I wanted to chase price, but I didn't know exactly how the day was going to end, and I had already caught a string of losses. So psychologically, I wasn't really like confident in catching like momentum. And right now I'm kind of kicking myself because oh man, look at this crazy move. This is this is a completion of 2 quarters, so 2 small quarters, and I'll explain what I mean by small quarters and big quarters in a moment, because I am going to focus more on that as time goes on, as moving forward. But two small quarters completed. That's like, you know, $250 per contract, so per micro contract. So a little bit of FOMO at play, not gonna lie. So that was my win. Now let's take a look at my losses. The losses came from the crude oil mini, and I wanted to keep track of this, but today. But I didn't take any 3-to-1 or 4-to-1. It was just 2 losses straight up. Off of a 5-minute opening breakout candle, which is right here. This candle right here. And again, same situation. Like I was only looking for the buys, but I got stopped out, right? I didn't look for the sells, otherwise I would have gotten stopped out both ways. So I think, and I'm noticing this is quite a bit. If you wait for a retrace, it usually tends to, you can probably squeeze out usually a 2-to-1 or a 3-to-1 out of it. I would have definitely aimed for the 40.75 as a small quarter, but we definitely would have never hit it. So let's take a look at my last loss, and then I'll explain what I mean by small quarter, big quarter, and how I'm going to use that more as a central focus instead of using the opening breakout as I've been doing for the last month or so, right? Okay, so my loss on the Dow came from, and this is an excellent segue to talk about the big quarters. Let me get to the proper time frame here. I usually look more on the hourly. So nope, that's not a good illustration because the drop is too steep. Okay, so another thing I use is the RSI. I use the RSI to measure momentum. Most people use RSI to measure overbought or oversold, as a means of reversal. I found that that's not actually that reliable as an indication for reversal, but it does measure. It's an oscillating measurement for momentum. So so long as the RSI is above 60, I'm looking for buys because there's strong bullish pressure, and so I'm looking for buys, and I look for it on the trend time frame, which is the hourly for me in this case, for the indexes. So you can see it was above 60, way above. It was above 70, close to 80 for the beginning of the day, and then you can obviously tell that it dropped. It dropped significantly after that. So so long as this was above 60, I was looking for buys off of one of these lines, either the green or red lines that you see. So going back to the smaller time frame where you can see it split up a little bit more, I wanted the buy off of I believe off of this green line right here, which is a hesitation band. I'm gonna use a little bit of a technical term. It's a hesitation band off of a big quarter. A big quarter is anything in increments of 250 points, and a small quarter is 25 points. Right, one is literally 10 times bigger than the other, so that's how you determine small or big. So you can see that my red lines are in increments of 250, and the green lines are kind of like a border, like a border, kind of like, think of like a basketball court or like a football field where you have like the out of bounds lines, like that's the border. That is placed 3 small quarters, so 25 point quarters away from the 250. So this is 75 above, 75 below, 75 above, 75 below with the green lines. So I wanted to take, those are my entry and exit points almost always. They usually work out really great, but today it didn't work out so good because of the crazy bearish pressure that went against me and stopped me out. So I had an entry on this line, 26,325, to take it back up at least 100 pips or so, or keep saying pips, ticks, or in this case, a tick is a point for the Dow. I wanted to take it at least to back to the red, because the RSI was above 60. So I was just using that to help me make a decision. Am I going long or short? Obviously, in today's case, I was dead wrong. But usually, if things are normal, if you're in a trendy market, it works out more often than not. Today was just a bad day, and I gave away all my profits. I ended up finishing the day with like $12 in profit, which is like nothing to brag about. And not very happy about it because I gave away several $100s in profit. But I mean, I'm okay with it because I stuck to my rules, right? And it was just that the market went against me. The price, it just didn't go my way. I'm okay with what I did today because I maintained discipline. Really, is what it comes down to. Even though I really wish I had just taken this because I had a hunch. Like again, same with the Dow. On the larger time frame, we were at pivot highs, like going back all the way to June 16th or so. This was a controlling level, not necessarily fresh on this time frame, but I mean you can make it kind of look fresh however you want if you just decrease the time frame. So I was very wary of this level, both on the Dow and the S&P, but I just didn't have that technical reason to go short, and so I didn't, and I certainly wish that I did. So going forward, I'm going to focus less on prioritizing the opening breakout or the Orbo trade, opening range breakout trade. And I'm going to use it more as a way of defend the opening range, defending against my typical quarters trades. So you can see how I don't really need to know necessarily what like structure is dictating what my entry point is. Like I love the system of having quarters because like. I don't know about for you guys, but for me, if I can think less, I trade better. So this is a way for me to think a lot less. If my entry point is on these lines, then all I need to know is, am I going long or am I going short? And what is my stop, right? My stop is going to just be simply the next line for the Dow, right? It's a little bit different for each of the indices. The lines are drawn a little bit different, so you kind of have to understand it first. So if you're going to follow along, I would say just use the Dow because it's kind of the cheapest, even though today you would have gotten pummeled. It's only 50 cents per tick on the Dow, and that's the cheapest you're gonna get. And so you're gonna be able to afford larger moves with that with that kind of pricing on a micro lot, on a micro contract. I keep mixing up forex and futures word terminology because I'm coming from a forex background and I keep missing that up. So I apologize for that. But what I'm looking for here is, like, on the overnight, for example. It gapped up. It gapped above the 26,000, and I could have entered here, but it never really came back down. So you can argue that you should adjust the entry point to be more specific, and there are, like, definitely plenty of near misses, like on the Nasdaq, for example, which also I draw the lines the same way as the Dow. You're gonna get, like, maybe this wasn't the best example, but you're gonna get near misses where I wanted to take the short up here, but it never really hit. So you're gonna get that, but that's the price you pay for the convenience of having, like, the most simplest system possible. So on the Dow, we're aiming for entry from this hesitation band. Like, the green lines are called hesitation bands because that's like the pause area. I wanted to take a bounce. I was basically catching a falling knife here. I wanted to take the bounce off of here because as of this moment, the let's break it down a little bit. As of this moment, the momentum had not shifted all the way down to bearish momentum yet. So I thought I could catch a falling knife here. Obviously, I was wrong, and my entry was this green line, and for the Dow, my stop was 75 ticks. So I always know my risk is $75, or rather half of $75, which is $37.50. I know that it's always $37.50 risk per contract for the Dow, which gives me the wiggle room to spread it out or stack it accordingly. I know I'm always risking $37.50. That simplicity gives me like peace of mind and allows me to focus on other things. The more I think, the more I tend to ruin the trade. The Nasdaq is drawn the same way. The red lines are drawn every 250 points. Obviously, you have the ticks as well. 4 ticks to a point here, but largely I ignore that. For the most part, I am interested in entering on the nice round numbers, ignoring the 2 decimal points after the whole number. And so here, same kind of deal. The Nasdaq, the red lines are drawn on every, like, 250 points apart, and that's usually where today was a bad example of it. But if you go back, that's more often than not, that's where, like, prices will bounce. Like, price bounced off the red line multiple times here, so I had multiple chances to take small trades, like 3-to-1, sometimes 4-to-1 trades off of this red line multiple times, right? Once, at least twice, right? Same thing off. So, like, this is a case where you just had a bunch of near misses. If you're looking for a reversal, because you can see that the momentum is now below 40, which means you have a lot of bearish pressure on the 30-minute anyway. If you're looking for on the hourly, which is what I usually look at, you're not quite below 40, right? It's holding up. That's why you got a little bit of support here, but you're not able to enter at 500. You're like, come on, I just want to get entered at 500, right? And it's not happening. So this happens sometimes, and I guess you could, you can move it up a small quarter, right, and enter on 10,525, in which case you would be entered. But like throwing in extra variables into the mix is not really my game right now. This is just part of, I'm gonna chalk it up to like, I missed. I took a shot here at the 500 and I missed, just straight up. With this bullish pressure, like if I'm only seeing this, if I'm seeing this candle, I wouldn't be that confident, but it is technically above 60, and I would put an entry, and I would have gotten stopped out for sure. Like this is the system. So it's like no entry here, stop out here, but I take it again, and it would have worked out from off of the 75 all the way up to 675, which is 100 points. So for the Nasdaq, my stop is depending on which line it's in. It's either 25 or 50, which is a small quarter. And since the Nasdaq is $2 a point, that's either a $50 risk or a $100 risk per trade. So that's really where I'm gonna go. Moving forward, you're gonna see me take trades off the green and red lines that you're drawn, and they're drawn basically. The red lines are drawn first. They're drawn 250 points apart, right, in increments of even like 250, 500, 750, and 000. That's where they're drawn, and then the green lines are drawn 3 small quarters, so 75 points above and below. It's as simple as that. Those are my entry and exit points. Those are my entry points and targets. And I'm not really going to complicate it further than that, although there is room to get more complex with this, introducing smaller quarters. On the S&P and gold, I draw them a little bit differently. I draw them consider like on the Dow and the Nasdaq, I'm playing with actual quarters, and think of it like on the S&P and gold, I'm playing with dimes. I'm playing in increments of dimes, because here the red lines are drawn 100 points apart, right? So it's not so the red lines are not quarters. They're like dimes. Just remove the 0, and then that kind of starts to make sense, right? And then the green lines above and below are drawn 1/4 above and below, so 25 points above and below. So here I'm usually looking for taking a trade, entering on a green, and completing at least one small quarter, so getting at least 25 points out of it. And if I can stack it, then hold it for like a 50-point move, then I'll do that. I think that's really what happened the other day. Over the weekend, I completed 2 quarters. Almost 2 quarters. I did end up taking. What did I end up taking? So I had a trade prior. Oh, so I actually completed 3 quarters. So, okay, sorry about that. I think I need to lower the time frame because I'm getting confused here. Here we go. So, my entry was on this dotted line, right? So normally you would not draw this. You would not draw this green line here, right? Because as I said, you would just draw a solid green line above and below. 25 points on each dime, right? Each red line, which is 100 points apart, right? If you look at this, but you get a blank spot here. You get like a 100 point or rather a 50-point area that has no quarter in between it. So I just drew a dotted line just to remind myself that, okay, this is a quarter as well. So let me bring that back. Oh my god. Okay. So with this much bullish momentum, I took like a market order or like a buy stop order at the 31.50, and I was like, I'm gonna hold it until it goes. I could take a profit at 31.75, but I didn't. What I ended up doing was I took two contracts, and this is how I like to manage risk. I take one contract for a 1-to-1, and then I take the second contract with an open target and kind of see what happens. So at least that way I'm booking 1-to-1, and my stop here is half a quarter. So my stop is 12.5 points here. So 1-to-1 ratio is 12.5 points off of the 50. So right when it hits the middle, right? Just think of the halfway point between the green line and the dotted green, right? I took the 1-to-1, took the profit. Now, even if I get stopped out of this trade, it's a break-even trade. I don't have anything to really worry about. That's important to me for my own psychology and my own mental health, that it's a free trade, right? And that gives me the confidence to let it go, right? And not have to want to take profit at 31.75. So I let it go, and all the way until the 3,200. Why did I stop it at 3,200? Well, I kind of felt that something like this was gonna come, something this turnaround, but it didn't yet. So I took profit at 3,200, and then I re-entered here. I waited till the opening breakout, right, and trying to incorporate the Orbo trades into my quarters gain, and fortunately it was hovering around the red line all morning, right? All morning it was just hovering around the red line. And I took the opening range breakout trade, and I took the stop at the next quarter, which was the perfect place to take profit. It would have been a perfect place to reverse the position and participate in 1, 2, 3 quarters completed, right? That's 75 points, which is hundreds of dollars, per contract. But I missed out on that. I honestly did not see that coming. I don't think anybody really saw that coming, and I didn't know how to execute that kind of reversal so immediately off of the same candle. I think I did have an order, like a limit order, just sitting here waiting. But once it got down here, I was like, I don't know. Now I'm a little bit scared. Like I don't know if I want to. I was tempted to take the buy back up, and catch the falling knife here and here. Which I did end up doing on the Dow by accident, because I had some orders just pending there that I didn't think about. But the set and forget strategy sometimes comes back to bite you, and I gave away all my profits as a result of that. So anyway, the point is, on the S&P, the lines are drawn a little bit differently. They're drawn. The red lines are the main thing, right? So they're drawn 100 points apart. I can take this away, right? They're drawn 100 points apart, and the green lines are drawn 1 quarter above and below. Those are my entry and exit points. On the NASDAQ and the Dow, because of the way that they move, I don't want to get too much deep into it, because I tested both ways. It tends the theory, the quarters theory tends to work out better if you draw the red lines 250 points apart, and the green lines above 3 quarters instead of 1. Oh my god, look at this. The market just opened, and we're seeing a gap up. It opened while I was talking. That's great. Okay, so we'll get into some more of the evening trades. I'll talk about that more tomorrow as I decide what I'm gonna do. If I'm gonna jump in on this bounce back up, or not. We'll see. Stay tuned for tomorrow. Make sure you hit the notification bell and subscribe for more videos like this on a daily basis, every day when the market is closed, between 5 and 6. Stay tuned for the next video from YouTube. Thanks, everybody.